We are back to the results that were announced on Wednesday. Yes Bank among them. Rajat Munga, the CFO of Yes Bank, joins in for a boardroom chat. Hi Rajat, thank you very much for dropping by. Well, I wouldn't know whether to start with growth or margins. Let me start with margins. There has been an improvement. What do you think this quarter will hold in terms of margins, and more importantly, the full year?
Yes, there has been a slight improvement in margins. We have reported a 3.0% NIM in the fourth quarter performance as compared to a 2.9% NIM in the earlier quarter. I think the trajectory is of improvement, and I have reasons to believe that the trajectory is still of the same order. The liability position of the bank is continuously improving. You would have seen that we have reported improvement in our CASA numbers as well. We are at now 22% plus CASA mix on our deposit book.
What is the cost of your CASA actually? How much is current, how much is savings, and cost?
Out of the 22%, 9.4% is current accounts, so they cost zero, at least on the NIM line, while there might be operating costs. And the cost of savings accounts, which is the remaining about 13 odd percent, will be between 7.1 and 7.2%.
Okay. Hi, and thanks for joining in. There was no fresh restructuring that you all saw in the quarter, plus your asset quality, ratios have also improved. What's it going to look like in the coming 2 quarters? Are you still getting a sense that there is unlikely, you may not have any further restructuring? The pipeline is that low?
Yes, I think restructuring is, if you, for a moment, not just the fourth quarter, you look at the third and the second quarter of the year gone by, we've actually had no restructurings. So while there is a situation in the economy and there are challenges with some exposures, I think restructuring as a strategy for our bank is not a plan A. It's not even plan B, it's actually a plan C kind of outcome. We have also opted out of the CDR restructuring mechanism because it does not favor a smaller bank like us in terms of the larger exposure kind of situations. So restructurings, I don't think is going to be an oddity. It is not going to be the rule. On asset quality, yes, we did have a better fourth quarter. We had new slippages of about 50 crores, but we had recoveries of about close to 70 crores, which actually helped us reduce our stock of NPA. So we now are reporting a 31 basis point gross NPA position, which was at 39 basis points as at December 31st. The next 2 quarters is not all, let's say, clear in terms of the economy is still struggling to bounce back. We have a few uncertainties also around the corner. A good government with better policies can also steer things clear in terms of an improving asset quality scenario. I would definitely like to believe that the asset quality is, last time I would have mentioned, is no longer worsening. I can possibly afford to mention is that it is improving.
Okay. Well, NII, in volume growth, one can understand banks not wanting to lend too much in times like these. But 11%, you'll have done so much better in previous years. What would be your best guess for FY15, if you have a guess for the quarter?
The quarter is too soon. Guess for FY15 will be closer to the vicinity of high teens, even as much as 20% as far as loan growth or deposit growth is concerned. This year it was little peculiar in terms of having base effects. We did grow our loan book a little over 18%. Our deposit book grew about 11%, but that has a very sharp base as at March 31st of last year. Our credit substitute book did not grow, so it was flat given the circumstances on interest rates that we witnessed in the year gone by. So as a net of all these situations, we've had a little bit of a less than our past trend of growth. Though in line with our philosophy, we were looking at managing risks a lot more than achieving growth outcomes in the macroeconomic backdrop. And like I was mentioning, if the economy improves, there will be enough to work with in terms of growth as well.
What are your capital raising plans? You said what, 500 million, right?
Yes, so this is the board meeting we have concluded is the one prior to the AGM, and we have an approach to roll over our last year's sanction from the shareholders, which was of 500 million, which has not been executed, and we are keeping our options open for this current year at this point in time.
How soon will it be in the first half of the financial year, this fundraising?
Well, the announcement is towards a resolution for shareholders, which is more an enabling resolution. I think the capital raising will stack up when the growth stacks up. So if we have to grow at, like I was mentioning, at 20%, we have internal accruals which support that growth. Our ROEs are close to 25%. We distribute about a fifth of our ROEs through dividends, so that leaves 20% capital accretion, which can support a 20% loan growth. If growth is more than 20% and significantly, capital will be in order.
Okay. Now for the real question, Rajat, have you all approached the Reserve Bank at all? Have you all had talks with L&T? Are they planning to buy any part of your bank's stake?
Well, none that I know, if that is a sufficient answer.
It's not at all a sufficient answer. I mean, it's difficult. You sat with the promoters in the board meeting and you had these headlines flashed all over. As one of the highest functionaries of the bank, it's difficult to believe that you don't know.
Well, whatever we know or our promoters would know, I think the press was kind enough to publish the responses along with the news as it broke. So I think there is enough in terms of the bank's context that has been presented. It is harder for me as I represent the management of the bank, so it's not right for me to be commenting on matters which have already been sort of commented upon by either the promoters or the board in the press.
But you got a one-line denial.
Well, yeah, denials should be short and sweet, yes.
No, is it that, okay, how much time does the bank have for the promoter stake to come down? How much has the Reserve Bank given you?
Well, there is no such stipulation other than what we have on our license, which was a 49% promoter holding limitation. So we had to bring the limitation,
the
promoter holding below 49%. That has been achieved about 5 years ago. The rest is more what is the evolving and emerging regulatory landscape.
No, the regulatory landscape is very clear what applied to IndusInd, what will apply or continues to be applicable to Kotak and to Yes Bank as well.
Yes, so
the promoter stake has to come down to 10%.
Logically, if you look at that, we are possibly the lowest promoter ownership in all the banks that you mentioned. So it's a natural course. We discussed capital raising. So if we do raise capital, our promoters are going to naturally dilute. So and if I can put a small historical perspective, our promoters started with a 75% ownership in the bank. And that was not very long ago, 10 years ago now. So this was also our 10th financial year that we wrapped up this March 31st. And their ownership is now Rana's ownership is down to now about 13%. So it is sufficiently there in terms of historical evidence where the trajectory of the bank is, and the promoters are likely to dilute as and when we raise capital again. So there is no real compulsion as far as that subject is concerned.
Okay. No, there is a compulsion, and if the law says below 10%, it has to be below 10%. But and I get from the Reserve Bank that they are very clear that they don't want to give further extensions. They want to force it upon promoters to bring down their stake.
Well, RBI has a view, and they do take management views into consideration, and we are naturally going to dilute. There is no case for RBI to tell us that you please dispose of your stake, or is because there is a natural course of dilution which is lining up.
But in that context, a merger with L&T would be so negative for you, wouldn't it? I mean, their NPLs are 3%. Yours is like 0.3. Why would you want to do that?
Good question.
Exactly. I want an answer.
Well, the question is good. Answer is I don't know.
All right. We'll leave it at that. Thank you very much, Rajat Mogha, for joining in.
Thank you.